Welcome back to Stonkcast, the market show for the average Joe. Whether you're a diamond-handed degenerate looking for the next 500% play, or a more conservative swing trader or investor, we've got you covered. We tackle the latest market news, give our 2 cents, and maybe, just maybe, help you make some money along the way. I'm your host, as always, Brandon Shar. Welcome back, folks. We have a special episode today. Got another interview lined up here. I got Tom from Tailored Trades, who is taking some time out of his day to come on the show. Tom, thanks so much. How you doing?
Doing pretty good. How about you?
Doing good. Doing
Good.
good. It's what is today? It's Thursday. I mean, the markets are pennies away from a new all-time high, so I think most of America can't really complain right now. But um, as far as the structure here, folks, basically, I have a few questions. We're gonna basically just go through these. I've gotten to know Tom just a little bit here from some of the material that he's put out in the Taylor Trades community. Um, Saw a fantastic video you did on, I think it was just market makers, gamma, and how options impact things in the market. It was a fantastic video, great material. So, very excited to get you on here. So, let's just kick it right off. As far as my first question here, just very simply, how long have you been trading and what got you into the market, I guess, originally?
The total time in markets pretty scattered. Like I would say total like continuous is probably since like really early 2020, like just prior probably the pandemic. But like I'd bought like and traded a little bit of crypto when it got really popular in 2016, 2017 or so. Paid attention to markets a little bit just because it was, econ and geopolitics as a whole was just kind of something I paid attention to. When you're in middle school and you go through the great financial crisis, it just kind of burns it in your brain that that stuff does matter, because
Yeah.
you just associate like, hey, the market's down 20% with everybody's going to lose their job. I mean, that's not the way it goes, but that's the way it kind of got burnt into a lot of heads of people that were my age. So
Yeah.
it was more kind of just about like, okay, something bad's going to happen. And they were talking about like, I mean, when you start shutting down trading lines, it's like, well, this isn't going to be good. And then you start thinking, you're like, okay, well, maybe you can buy something here. That's been like the notorious problem, with the stock market from post 2008 is really outside of Liberation Day and kind of the COVID crash. There really were no opportunities, that were just obvious, like put money in. So that was kind of the thing. It was more just kind of like, well, I guess if there's a good time to start, it's now as opposed to at an all-time high.
Yeah, that makes sense. Kind of the old philosophy, right? Buy low, sell high. You're just kind of applying that to when you got in. So, all right, cool. Um, can you can you take us back to like your very first trade? Do you remember what your first trade was?
um, so I mean, like I'd bought, like I remember again, it just happened to be timing. So in 2017, I literally saw the bubble pop. I had the Coinbase app on my phone. I just had like all the little tickers popped up.
Hmm.
And I don't know why, but I just happened to buy like Chainlink or something down after like a month later. I don't even know what it was. It was like $5 or something.
Yeah.
And then in like the end of 2021, I just happened to remember. I was like, oh my God, I bought that thing. And I went and looked
Oh
at it. And
yeah.
it was at like 30 or 4. I don't even remember what it was. I was like, oh my God, I forgot about that. But the first actual options trade I ever took was literally the day, I'm not even kidding, it was the day that Trump declared the national emergency. I had the Robinhood app pulled up on my phone because I just
Hmm.
was like, oh, they just do an instant deposit. I'm like, that was easy. I was just sitting at work and I just saw them do it. And I was like, I remember like earlier in the day, I'd been like, what the hell are calls and puts? So I went and Googled them really quick. And, I mean, I'd studied econ since I was like on my own since I was like 15 or 16. So finance to me wasn't foreign language. I just looked at it and I just kind of went, okay, well, puts go up when it goes down. All right, well, okay, we'll just make this one work. And Robinhood was real nice back in the day. They should be like, you should buy this option, right? They would cater one for you.
What year is this?
2020. This is
Really?
this is back before things got like real out of hand. Got, and things got crazy and, bad things
You
happened.
should buy this contract.
But yeah, they would literally just show like here's a short-term option you can buy, and they'd pick the strike for you, and here's a
Wow.
mid-term, and here's a long-term. Yeah, they'd give you three ones. So I just picked it. It was like a 242 SPY put or something, or I don't know. I forget what the actual strike was on it, but I remember it was like literally like $2.40 or something, and then like Trump declares the national emergency, right? And I just nosedive and dumped, and then like it was like on a Thursday, and then on a Monday it expired and it was up like 800% or something. I turned like $200 into 1,000. I went, oh, I'm like, this is cool. I like this.
You're like, oh, this is gonna
I
be
was like,
what I do now. Okay.
and then I had one of the biggest bag fumbles of all time because that following week the market went down a little bit more, and I think it was April 3rd. I think it was April 3rd. The Fed announced they were going to print a ton of money and they got rid of the SLR and all kinds of crazy. They basically just opened up the floodgates on the money printer and said, all right, we're gonna. And I remember I looked right at spy calls for like January of like 21, and it was like for the all-time high or something like that. And I remember it was like August, and I could have bought like I think it was like $2,500 worth of spy calls, and so we get to August, and I'm like, oh, let's see what those would have been worth, and they would have been worth like 5 million. I was like, oh my God.
My
I was
gosh.
like, dude, I was like, what was I doing? So
Oh,
I remember my first trade, and I also remember my first biggest like bag fumble of all time.
wow. Yeah, the FOMO is strong there, I'm sure. That one still probably keeps you up at night sometimes, I would imagine. 5 million, jeez. Um, as far as your beginnings, right? Were there any early mentors or any books that ended up fundamentally shaping the way your edge has developed, things like that? Or were you pretty much on your own from the get go? I know you said you had a bit of a finance background, when you started out on Robinhood and everything, but did you have anybody in your family, any friends that you knew that were traders or no?
No, only a couple of my friends, but I already knew more than them and was a little bit, better than them, so that didn't really do me any good. No, fate loves irony. So everybody that I met, like, our mutual friend Kevin, everybody I met was after I got, you know, all of the pain and punishment to learn everything.
Yeah.
So it was like right after like I like lost in every single way possible and then learned from it and then started to make money. That was immediate when they're like, "Oh, now you can meet all these cool people in your life that all know how to." I was like, "Oh, thanks. That was real helpful."
Yeah. Okay, awesome, awesome. I just want to get into a little bit of, edge or strategy, just so, listeners can get a bit more familiar with you. So I guess very simply, how would you define your edge in the market today? Or what is your specialty or strong suit?
Oh, risk management.
I like that
Um,
answer.
the worst win-loss record I've ever had for a month was 18%, and I was still green 1%. So
What?
literally lost over 80% of the trades and was still like, I mean, you could consider it flat, but was like still net quote unquote green.
Right, because your
Risk
risk to
management.
reward
No,
was so high,
yeah,
right?
yeah, like it's kind of one of those things that like, I don't try to be exceptional at it, but I just think it's like the most important thing. I would rather I would rather get stopped out for a little bit and watch it completely run than to just bag hold a loser all the way down and be mad at myself.
And have you always been like that from the get-go, or was it because of some of those like early trades, those amateur days, getting burned one too many times that you were like, hey, look, if I want to do this for the long haul, this isn't the way to do it?
No, growing up, played a lot of sports and whatnot, played soccer and baseball, and the way we were taught is in the playoffs or especially championship games, overtime goes forever. So you maybe can't win a game right away, but you can absolutely lose it right away. And if you can be good at defense, they say defense wins championships because you can stop the opponent from knocking you out of the game. right? So you can just be patient and stay in the game until you have an opportunity to win, and then when you get that opportunity, seize it. And that's when you hear about these people that they just buy every falling knife, right? Same thing, because they're trying to play offense. They're trying to, it's like instead of just being patient and letting it come to you, they try to force things, and that doesn't work in anything. You can only take the opportunities you have, and if there's no opportunity, you can't force one.
That's well said. Thanks for sharing that. So obviously the market, there's a million different things that you can focus on, different things you can trade, right? But for you, what are some markets that you mainly prioritize, if any, right? Whether it be crypto, oil, discretionary. Yeah, what does that look like for you? How big is your watch list, I guess?
The watch list is pretty wide, but basically, like on any given time, it's pretty like the things I'm actually looking at are pretty narrow. And what I mean by that is that there's an environment to trade gold, and so we'll say there's like two environments to trade gold, and there's like 10 not to. So if you're in one of those 10 that you're not supposed to, I literally throw it as far away from my field of view as possible. So like things that aren't like it sounds kind of hippie, but markets kind of like tides, and if you trade chop, right, you're wasting opportunity. Like I mean, I've seen this so many times where people are like, I'm good at trading chop, and I'm like, okay, well if you make 5% and the market makes 15, you still underperformed everybody else, right? So it's like, so what are you going to do then when the market stalls? Are you going to underperform when it stalls too? So to me, watch list, it's more about, are you paying attention to opportunities, or are you just looking at things because you like looking at things?
That's great. That's well said. And yeah, I mean so for me, I got involved in the market in like 2020. Didn't really get serious about it though till I'd say 21, 22. And that's been a struggle where, you just there's like something in you, there's chop involved and you're like, I still think I can predict it though. I think this thing's going up or down. Like Tesla today, that thing just barcoded and there was a part of me that was like, yeah, I think it's gonna break down though. It's better to wait for that confirmation. Like you said, right? So you don't just get chopped up. So I like the idea of like throwing away as far away as possible, right? Things that you don't need to be paying attention to right now. I think that's
Well,
that's
like
great.
I'll give you like a really good example, right? So they keep talking about interest rates, interest rates, interest rates. Well, until the dam breaks in either direction, you know, well, until we either get, okay, rates are coming down or they're gonna go higher. Like, I mean, I've had so many people ask me, "What do you think about TLT? What do you think about TLT? What do you think about TLT?" I'm like, dude, that thing has like just look at the chart. I'm like, it hasn't moved. I mean, sure, you could get puts, at those random high points, but it's like wait for the market to create. I hate that this is a thing, but wait for it to create a narrative, and then understand the narrative first before everybody else, and then just be there. You don't have to be there first. Just be there when it's confirmed that it's true, and then just be there until the last person finds out about the narrative, and then you sell on them and go find the next thing. It's you don't necessarily always have to be first. You just have to be right. But usually, if you're right, you were still there pretty early, anyways. Like if you can't verbally tell yourself a story as to why this is happening, you probably don't know what's happening. Like Tesla's super easy. It's just Elon says some new ridiculous thing, and then everybody believes it, and then the stock just goes as high as many people can believe it, and then it either works out or it doesn't, one of the two, and then that's where the price retraces from. And the question is, does it retrace from an all-time high or mid of the range? How it goes.
Yeah. That's a good point. And I mean, especially speaking of Tesla, right? Especially of late, right? We had the Robo Taxi event last weekend, and that initial like knee jerk reaction to it, I was kind of shocked by it, actually. especially in light of the geopolitical tensions we had with Iran and Israel and the U.S. stepping in and bombing Iran's nuclear facilities. I was like, regardless of how well this event goes, this thing is probably going to show some weakness on Monday. And then what it do? It just freaking skyrocketed um, based off of one day off a limited launch in Austin, Texas. And I was like, man, dude, it's it, Tesla's just a wild ride. Um, Especially considering the fact that it's like such a high beta stock, right? It always has such exaggerated moves relative to SPY or whatever. But how often do you find yourself trading Tesla?
Kind of never now. It's not the, I mean, one, I haven't really this year alone, I haven't done much day trading. Like, uh, the simple reason why is when Trump won the election, I saw a lot of people like on social media, and they said, "Oh yay, now I don't have to worry about fundamentals or the news." And I like had this moment where I like kind of paused, and I was like, "Well, I wasn't trading the markets last time he was president." But I remember about every 2 weeks there was some headline about market moves this direction or that direction on thing he did, and
Sure.
I think you guys all might have just thought that this guy was just gonna print a bunch of money and walk away. I'm like, I clearly don't understand the environment you're in. Like this guy isn't like, I mean, they called the last guy Sleepy Joe, and it's like because you could just go to sleep and he was sleepy and you didn't have to worry about Biden like saying something. With Trump, he just says things and moves mark. I mean, the dude literally said buy stocks, it's a great day. And that was a week after he basically walked out with a board that like scared everybody into one of the biggest, like, you know what I mean? So the idea of like, well, I don't have to pay attention to the news. I'm like, oh, I think I'm like, I was telling people like, you
I think
might
it's the
not even need
opposite.
the chart. I was like, you might just only turn on the news and turn off the chart. Just have a buy
Yeah.
and a sell button and wait for. So that's what I mean. So like, I haven't done like a lot of day trading really this year because Trump kind of just has this cycle of say a thing that scares everybody, market then gets scared, and then he realizes that he scared the market, and then he says a thing that makes it completely rebound, and it's just a cycle. He just does it. I don't know if he tries to or if it's just the way he is. But I just
Yeah.
haven't done a lot of day trading because of that.
Yeah. What was it? Man, that historical Green Day that the Bulls will be dreaming about for years. When he
10% day.
Well, it was the day that he announced basically a 90-day pause, and SPY went up some insane amount in a matter of
It's
like
like
2 hours.
10%. Yeah.
Yeah, 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 okay, yeah, sorry. Yeah, yeah,
Yeah.
the 10% day. And that was the morning, as you were saying, when he was like, good time to buy stocks. I remember seeing that and being like, okay, Trump. And then, sure enough, a couple hours later, here it comes,
He almost blew up the bond market that night. Like really what
Yeah,
happened was, I mean, like spreads went to like I mean, he literally almost blew up the world financial because again, like nobody thought he would actually do any of this. So the
yeah,
banks didn't bother to like insulate themselves or hedge themselves like on the because you gotta remember they're sitting on all these treasuries that are like 5, 10 years old that yield 0% or 1%, right? And yields are at five, so they're already bleeding. And next thing you know, they're like, "Oh my God, he almost just blew up the market," and all these people are like trying to go to the bank because they're, "Oh my God, the terror!" It's like so he had to the next day go out like just again just the mechanics of the market. He almost blew it up. And Jamie Dimon probably called the White House and was like, "Hey, you just about blew everything up, and we probably can't hold the fort too much longer. So we're gonna buy low here, and you need to bolster our balance sheets to like soften this. So just go say something they're gonna like." And Trump just naturally said, "Go buy stocks," because I guess that was easy. Didn't Doesn't take a genius to know what that means at the lows.
no kidding. Oh man. Yeah, and if you would have listened to him and bought when he said to buy, considering where we're at now, I think the S&P 500 is like a stone throw away from a new all-time high. It almost got it at the end of the close today on Thursday. Um, you would be up massive. I mean, well over 20%, right, from the bottom. So, um, yeah, that's insane. So, you're not day trading right now from what you said. So you're primarily just swing trading at this point, right?
Yeah, it's been I mean, again, it's capped in hindsight here, so obviously you have to make these decisions right ahead of time. But like to
Sure.
me, like I mean, I shorted Dow futures. I mean, I got it even posted on my trading view at the time. I even had a couple people message me on Discord, and they were like, "What are you doing?" It was like February like 15th, or I forget which date, but I shorted the Dow futures like 45,000 because I just saw this like falling wedge forming. And I just kind of thought, I'm like, well, Trump's tariffs are going to be like a blanket on the economy, so we're probably just going to have like this year-long bear market. And of course, he just decided to speed run a bear market. He's like, that's not going to take 8 months. I'm going to make it take 8 days. So he just, he's like, I'm going to have the fastest, biggest crash you've ever seen. So I closed some of it at like 41, and then Liberation Day, or I call it Liquidation Day, I covered a bunch
Liquidation.
of it down at like, I don't know, like 38 or something like that. And I just left one of the contracts left at 45,000. I just realized like 80% of the money. I'm like, I'm just gonna hold that there and I'll just go long everything else. I still have this like hedged short. Because the thing is like when your range is, like let's say a stock's range, like its high to its low, is like 7 or 8%. Well, I mean, swing trading isn't going to be like the greatest strategy of all time because you might take like 6 months to cover the range because it's just not very big. But if you have a range of like, so in that environment, day trading and scalping and stuff is going to be really, really effective because there's going to be lots of little moves in between. If you have a range that's 30% from the top to the bottom, it strategically makes zero sense to try to day trade that because if you just drop 30%, well, you're going to get a dead cat bounce of like at least 15. So it makes no sense to try to like trade every one of those little moves because the best traders in the world have win rates of like 90%. But your win rate doesn't account for how much you lose when you lose, right? It's like I know people are like I have a 90% win rate and they make like 1% a trade and then they lose 10%. And it's like okay, so you still make no money. Um, so if you have a very large top to bottom, actually, I'm just going to show this to be honest because I think it's a little easier to show.
Yeah, please.
I just think it's a wasted opportunity
So
to
I, sorry, not to cut you off. I just want to make sure I
to
understand correctly. So you're saying, are you referring to like the ATR, like the average true range? Are you saying like when that
yeah,
gets
yeah.
really
So
expanded, you should be
so like
swinging?
yeah, so like here I'm streaming this right now. You should be able to see it, right?
Yeah, yeah, I can see it.
Okay. So let's say I don't know why this is drawn in. I'm using one of my other layouts here just because I want to keep my other stuff a little bit. So the market looks like this, right? So you're gonna get a bounce. This is like the pivot, so it should realistically be like here. So if I told you on the Nasdaq you have a you have a 6,000 point range, right?
Jeez.
Well, let's say I told you the dead cat bounce will be like 50%. Let's say you're gonna get let's just say you're gonna get 3,000 points. So let's say somehow you bought right here. Let's just say you were real brave and you bought an NQ contract with a stop loss of
With
$16,000. All
with
right,
balls of steel.
right. Oh, hold on, I goofed it. 1 second. I gotta reset it now. Um, I'll just because this is kind of what I tell people about risk management. So I guess if you want to do this, you could do this. And we'll just speed run this and see what happens. So even if you were like right here, you
Mm-hmm.
were up like 40 grand. I don't know how many people would make 40 grand and not blink.
Yeah,
I feel like a lot
yeah,
of people make 40 grand. They're like, okay, I'm done for the year for trading.
right.
So the point is all you would have had to do is do one thing. And this isn't even like a good fill. This is like if you messed it up, right? Because you bought it up here as opposed to at the tested support or on the retest. So this would have been
Right.
like 100 grand
Jeez.
because your range is so big, right?
Right.
Now, if your range is like, you know, now if your range is this, imagine your range is this big, you know, well, that's not going to be a very great, you know.
Right.
So in here, good scalper, good day trader market because you have kind of a, I mean, again, it's a 3% range. I mean, really, you're gonna buy it here, and you're gonna wait a week. make 3%. We're talking equity, right?
Sure.
You're going to wait a week to make this move. I mean, you go find some other higher volatility thing. But when your range is this big, you know, now you're now it's like, oh, okay. So what's going to happen here is the Nasdaq's going to do one of two things. They're going to do this, right? And then we're going to come down somewhere, or it's just going to like blow through it and, make new highs.
Right.
So essentially what's happened is the money making event was technically right here on the break of this because it was kind of like a double top, sort of. But you either had to be short here or long here. That was the quote unquote generational money event, right? The defined one. So
Right.
the issue is that if you reject this top trend line or this top level, now suddenly your risk parameter goes, okay, well, where's support? I don't know, maybe here, right? Somebody could just draw something in, and you just, people just start drawing in random levels. They go, oh, maybe here. They go, oh, there's a pivot there. Well, now when you start looking at like what your risk to reward is, like, oh, now it's only 5%. And let's say you break under there. What's your risk to reward here? Well, now it's like 2%. So it's like, okay, so the first main support. So then it becomes day trading and scalping starts making a lot of sense. Like you can see where day trading and scalping made a lot of sense. Like clean it up a little bit. You have these defined lows, right, and these defined highs.
Mm-hmm.
If you go back to the smaller time frames, that made some sense. Pretty tradable in here. You got lots of little levels. You're probably, if you buy options, depending on your time frame on them, you probably weren't going to lose all your money. But if you bought puts over here, you lost all your money, right?
Oh yeah.
And if you bought calls up here, you lost all your money. It doesn't matter how much time was on them. Like you could have bought calls here, and I guarantee you, whatever call option you had even today, it's probably still minus 50% because of how much, right? IV probably collapsed
Right.
because you've now covered. So that's kind of what I mean when I say like it's all about risk management and understanding the opportunity that you have, you know? Because if you think that you're going to be smart enough, sorry, UPS person just rang the doorbell. Um, if you think that you're going to be smart enough to trade all this, go ahead, do it, right? If you're able to do it, do it. But if you know this is support because it hit it like 3 times and you just go long with some kind of size, I mean, you actually got a good entry here, like it wasn't like you had no entries to come back to. You just had to be confident. Caught a big move, and
Right.
and I'll show you what confidence looks like. I mean, confidence is basically I'll just show the Dow short that I took. Now it worked out completely different than I thought it would. Or like here's like some Taiwanese dollar. Basically went long this thing and caught like a bounce on it from well, it didn't zoom it in. Let's see if I can do this quick. Well, it's not gonna be able to zoom it in.
That was the
Yeah.
U.S.
So
dollar.
yeah, it was like the Taiwan dollar. I forget exactly what happened. It was like some news event that happened, and literally like this was just the logic. It was just it dropped a lot, you know. And I think I got like 5% or something. I forget. So that's
Wow.
kind of what I mean when I talk about like when the range expands a lot.
Mm-hmm.
You're gonna have like, you know, you're gonna have kind of like these moves that are just, um, oh man, this is like going really far back now. Can't even find my, can't even find my Dow trade.
So essentially, you're saying when you have
Yeah,
these massive sell-offs, right? When the range really expands, those are the opportune times if you're long to get into calls, for example, because of those dead cap bounces, like you were saying, right? Like you're going to get some kind of retracement there. Those are the optimal entry points. Am I understanding that correctly?
yeah, because when the range is huge,
Right.
that's when you don't have to do a lot, right?
Right.
Because if you're caught in a tiny little range and you just decide to full port long, well, I mean, you're not going to really make any money.
Right.
But when the range expands, that's when it's like, okay, it's time to do less. It's
Mm-hmm.
time to you have to simultaneously do two things. Size up, but you have to get the extreme of the range. So like if you're long here, you have to stop out like right here. You have to. You can't risk it
Right.
because then it's going to really plummet, right? So you just have to do it at the you can't like, and that's why this is one of the most hated rallies we've ever seen. I mean, you
Mm-hmm.
just ask people, they hate it. You go on Twitter, there's bears all over the place.
Yeah.
And the reason they hate it is because of this right here. If you look,
I thought that should have rolled over.
so if you look at what actually happened here, look at what your stop loss would have been on NQ. That's your stop loss. Most people can't. And that's if you got the low, that's if you got the exact low,
Right.
right? The average person couldn't afford this. They literally, the average person would have got liquidated right here.
Right.
So the reason they hate the rally is because they couldn't pay to play. And what people do is when they miss the right the reversal, they just assume, oh well, I'll just short it for now and then I'll buy it when it goes lower. And then of course the market did the thing that made the most people the most bad, and it never went lower, right? I mean, there was this wick right here. It's probably like some news or something, but it never went lower. Like there was never a point where it was like,
Yeah.
okay, there's my dip. I mean, this right here, that's where people thought, oh, it's filling this gap, and it didn't.
Right.
So what you do is when your range expands, right? So you can just see the distance, right? You have a small range, and then it gets really wide. That's when you need to do two things. You need to figure out where's the bottom. You need to figure that out ahead of time. You don't want to be
Sure.
guessing. And then you want to size up, and you need to do it at the extreme. That's the tough part. Because you could buy support, right? And it could just like right through it. That
Right.
could happen. But you have to size up here, and then you literally just have to set the stop loss and you just walk away. And that's what people can't do. They overmanage it and they overtrade it and they overthink it, and you know, the sea of green. All you do is just wait.
No, that's great. That's great. Thanks for breaking
Yeah.
that down, Tom. And speaking of, most people can't do it, that kind of leads me into, I wanted to ask you about trading psychology and what role that may or may not play for you, because you got to have a certain kind of mindset to buy that bottom right there, like you were just pointing out, right? That's not that's not where most people feel comfortable buying. Most people feel comfortable buying after like today's close when we're like, oh, we're clearly about to break out to a new all-time high. But the real risk reward, as you've been explaining very well, is at the bottom. So, I guess for you, what role does psychology play, or, how do you handle the the mindset that you need to have as a trader? Because it's a lot different than any other work you could get into, right? You're in a fluid environment where things are constantly changing. So how has that, I guess, impacted you, if at all?
Well, the whole reason that process gets created to solve any task is because there's nothing more volatile and inefficient than the human brain. Like that's the whole reason we create process to solve like nearly every problem.
Sure.
Because I'm trying to think of the simple way to put this is again the least amount of inputs thing you can do. This is Captain Hindsight speaking with the stock market,
Mm-hmm.
especially with the Nasdaq. The least input thing you could have ever done was just go long. Don't ever sell. That's the least input thing you could have ever done. Doesn't
Right.
matter where. Well, the problem is it's not going to be the most efficient thing to do. So you're going to get the most total output. It's just over a period of time. I mean, I don't know how many people are sitting here going like, man, I'm going to buy this thing. I'm going to hold it for like, 15 years. I don't know very many people that do that. Most people buy stuff and after a month they're trying to get rid of it. Maybe 6 months they're trying to get rid of it.
Sure.
And I mean, all you gotta do is look at hymns. I couldn't get people to buy it at 24, but it goes to 60 and now they want it.
Sure.
And it's because there's this kind of inability to just it, you need to teach yourself how do I get the most output with the least amount of input. It's just the definition of efficiency. So if you can do very little and accomplish a lot, you save a lot of energy to be able to continue to accomplish more things. Like if I go long here, like right here, my strategy now becomes so simple. If I go long here, where do I sell it? And if it goes here or if it goes here. The two, I have two options, or I have two choices. But if you buy it here in the middle of the range, well, what are you going to do if it comes down here again?
Right.
I mean, everybody goes, oh, well, you should buy it. Yeah, but okay, but what if, ignore this. Let's say this never happened. What if it did this? And people go, oh, I buy it right here. I go, well, this is a double bottom. And double bottoms don't tend to bounce off the line. They tend to take out the low. That's how double bottoms and double tops tend to work. And then they do something like this. So it's like, okay, so your plan's to buy it here because you bought the middle of the range because you didn't do what you were supposed to do over here.
Mm-hmm.
So it's like, what are you going to do? You're going to buy it here, and but then the question is, how low do you know to put your stop loss? Because the range is huge, right? You're not dealing with these little candles that it's like nice and gentle, you know?
Right.
You're dealing with these big volatile moves that just tend to wipe everybody out. So
It,
you have to learn to do things when you're supposed to, right? So it's like, okay, this is the low of the range. Obviously, like the kind of the little trick that I had for this is I actually just drew in all these little imbalances, you know, in between the candles.
mm-hmm.
And then usually the last one is kind of the last, like if it takes out this one, it's usually going real low. That's kind of the trick. Like people always go like, how do you find bottoms? Like, no, you just find the imbalances in the candles and,
So
you know,
for those who may not know, Tom, can you just like briefly explain what an imbalance is? I tend to use
yeah,
these on a scalping intraday 1 minute chart, but for those who aren't familiar, yeah.
yeah, ICT stole the word and called it fair value gap because he had a course to sell. But it's essentially you take a candle and you just have no wicks in between it. So you see how I'm just using the magnet?
Sure.
It's literally just a space. So you have a wick here and a wick here, and it's just the space in between them. And like you especially on like bigger time frames, like obviously it's all hindsight, but you know, it kind of shows you where you're probably bounce. It's the same concept as like a volume gap. It's just an area where nothing was really traded. So what it means is that because you don't have any past orders, you probably don't have any positions sitting there. Let's say the price drops there and some big money guy decides to cover his position. Like there's no liquidity, which basically just means like there's nobody on the other side of the trade as him. So price just moves to where the orders are, you know? Like if there were no orders on the Nasdaq, like let's say down here, like at support. Let's just say there were no orders like at all for sells. Let's just say literally everybody bought. That's actually kind of what happened. Because right here, there was a report that came out on investing.com. It was a headline, and it was like 97% of hedge funds are short. And I was like, oh my God. So you're telling me 97 out of 100 people are short? I go, well, so when they decide to close their shorts, right, because they want to realize their profit and they want to buy, well, who are they selling to?
Right.
Because everybody who's sold's already sold. So the price just goes to, and if you bought here, you're not gonna like, I mean, nobody who bought here said I'm selling here, right? Like nobody did that unless you were scalping. But I'm talking about big money institutions that just robbed the bank because they bought it 30% off, right? We know
Right.
where their sell orders are. They're right here. And the way you know that is look at where the price went to. I mean, you know that in hindsight, but again, it's the same concept with these imbalances. Like, look, that's exactly where they put their orders. They just stuck them in areas, and you can see the price respected it, and they're getting smoked again. And that's part of the reason why we've had the reaction that we've had is because these people cannot believe that they just caught a flash crash, so they just set their orders at the top end of the range. Well, if that's the only price you can buy, right? Because the sellers won't come down to you, you have to go up to them. It's the same reason, it's the same problem with the housing market in the United States. It's like these houses have all doubled in value, so nobody's lost any money on them. That bought them 5 years ago. So they go, well, you can't sell your house, and they're like, well, that's fine. It's worth twice as much as when I bought it. So they don't care.
Right.
So it's the same kind of concept as like if you're new, it's not any different than anything else. You just have to learn to do the thing that you're supposed to do when you're supposed to do it. Like
Right.
if you try to do everything in hindsight, you're gonna get smoked. But you don't have to be first, you just have to be right. And that's why just understanding basic price action is just so important. Because if we go back to that drop, so this is a really ugly one, and part of the reason that it's so ugly is because it was so news driven. It's backwards. This leg should have been lower, but it still is a double bottom.
Mm-hmm.
So the way you play the double bottom, same way you play the double top. You just wait for the neckline test. You go along here, and then obviously same thing with the market imbalance strategy, which is pretty. I mean, this isn't even like a strategy. This is just like basic trading. As long as you hold this, you know, I mean, it kind of again, it respected the extremes of the ranges.
So just
So
so I,
that's yeah. Go
yeah, go
ahead.
ahead. Go ahead. Sorry.
No, so it just comes down to you have to be able to do the things that you're supposed to do when you're supposed to do them. Like you can't, and this is just kind of just general life advice. It's not even really something related to this, but if you're supposed to go long here,
Mm-hmm.
you have two choices. You can either wait for the double bottom, which is what I would do. Either go long, but again, I was in a short, so like I was trying to like, oh my god, I gotta get out of here. I'm like, this is like nuts. Because to me, the more things go down, the less bearish I get, and the more things go up, the less bullish I get. As opposed to most people, the more it goes up, the more bullish they get, and vice versa. So a lot of times what you want to do is just wait for confirmation, and then just don't buy the high of the range. Just don't do it. It's literally that simple. It's don't do the things you're not supposed to do. And if you're like, oh, I should have bought this, and it goes up, and you get mad about it. I mean, I don't know what to tell you because you're not supposed to buy at the highs. So it's like you're mad at yourself because you didn't do the wrong thing. If you do the wrong things because it just quote unquote, well, it worked out. Well, I mean, good luck repeating that.
Yeah, you just kind of reinforce bad behavior in a sense, right?
Yeah. I mean, that 2022 is the exact thing that happened. All anybody ever did is they just bought every dip. Like, definitely shouldn't have bought this dip. I mean, again, it's all hindsight. Should have
Sure.
bought this one. And then if you just look at the way this chart looks, that was probably really scary. Like, you're like, oh my God, I just bought the dip and now it's about to go lower.
Yeah.
Well, they just got conditioned to keep doing that over and over and over again. And then you can see what happened. It dropped, they bought it. It dropped, they bought it. It dropped, they bought it. This was the one that I remember smoked a lot of people. This is the one that killed everybody because it actually made a slight new high. And everybody, oh my God, it made a new high.
Bit of a tease.
Yeah, it made like a slight higher high. I took one look at that and I was like, at the time, this is what people bought, by the way. I remember looking at this. I was like using like my Weeble. I was like, they bought that. And they went, it broke over the level. And I'm like, and I just asked one of my buddies, I was like, where's support?
Right.
And he went, I don't know. And I was like, okay. I was like, so where's your support? Well, I don't know. They're lower lows. Well, we found out where support wasn't,
Yeah.
right? And again, and it did it another time here too. Same thing. It made the higher high, but it wasn't like a meaningful higher high. It's just. And again, like it happens because people they're not doing like it's because they didn't do what they were supposed to do when they were supposed to, right? So if you had support drawn in, it was probably like over here somewhere. Let me just correct this one a little bit. So one of the little tricks here is if you have a clean support drawn in and it comes in and bounces above it, that's usually not a good sign. That's not good. That doesn't mean like that was good. Like,
Right.
because look at what it did. This is good, right? It shows that the support holds. This was that crazy, I don't know if you remember in 2022, that crazy CPI day where the Dow had like the third biggest gain like it had ever had. We
Oh,
had
yeah,
the
yeah.
when we had the circuit breakers turn on, the plunge protection team, that was this day. It was because it broke that low, and everybody was like, "It's all over," burn the house down, and
I think I was telling I don't know if it was the interview I did with Kevin or just a separate show, but I was talking about how CPI used to really, really move the market like back 2022. Not so much anymore, I don't feel like. I mean, we still get reactions to it, but they used to be really big reactions. Um, especially during that time when inflation was like what, 9%?
well, the reason you got such a big reaction out of CPI is because, again, think in terms of the range, right? It wasn't just that CPI was going up, it's that it was going up and accelerating. It wasn't like going from 1 to 2 to 3 to 4 it was going from like 1 to 1.5 to 2 to 2 point, like the rate of acceleration. And
Yeah,
really what caused that bottoming out process was that number was about as bad as it could have possibly have been, but the rate of inflation had actually slowed down just a little bit. Just that curve essentially had flattened out just a little bit.
sure.
And then that's what caused the bottoming out because, quote unquote, smart money, which that's a oxymoron in and of itself. Um, Given that probably none of them bought any of the drop, but they're all buying it here at the top.
So I guess it's fair to say, just kind of coming back to those um, fair value gaps, whatever you want to call them, right? Those spots are basically just areas where there, like you said, right? There's not a lot of transactions happening, right? Therefore, if price gets to that point, it's either going to violently move through it or it's going to respect it because there isn't a lot of liquidity there. Is that like a good way to kind of summarize that?
Yeah, I mean, just think about it, right? Like this wasn't I mean, prices are just auctions, right? They're just you and me fight over price. Should it be
Sure.
higher? Should it be lower? Well, what this tells you is that there was no argument, right? There was no argument in price. It just everybody decided it's going that way. Or I should say the people that participated that day said it was going that way. So, you know, I mean, people go, it doesn't work, and I'm like, what do you mean? It's just physics. If two people argue about the price, I mean, if you and me sat there and said, what's the fair price of a Bugatti? You'd pick a price, I would pick a price, and you would have a higher one or a lower one than me, right? One of us would have a higher one of us have a lower, and that would be it. Like it would essentially
Right.
just be, well, I'm here and you're here. Well, if we brought 100 more people into the discussion, they would argue. Some people would say it was here. Some people would say it was here, here, and you argue about it, right? And then eventually everybody agrees on what it should be, or at least you you funnel out the people who have no grip on reality,
Sure.
essentially. And that's
Yeah.
just the way markets work. That's why they get priced up, and that's why they get priced down. I mean, like I mean, it's funny if you just look at 2022. This was just people that just bet. I mean, this was literally just one big bet that you could just print $50 trillion globally. I mean, it was probably like 20, and there'd be no inflation. That was the bet. Interest rates would never have to go up. So just borrow money at 0%. That's flexible interest rates. And then it turned out, oh, inflation did show up. Oh my God, I just bought all my stocks with leverage, with loans or money that I didn't
Right.
have. So then you have to reprice that risk out of the market. And then it goes over here, and people go, well, we just went from like 0 to like 4% interest rates, like the fastest anybody's ever done it. And again, just physics tells you if you do something the fastest you've ever done it before and it works with a lag, it probably means that you're gonna like have a big result. And that's what the smart money just bet on. They just bet on the fact that those interest rate changes would do something.
Right.
And what was the downside risk? Well, it will cause a recession. But the recession is at the end of the cycle, not at the beginning of it.
Sure.
So if you're in this quote unquote booming economy and the Fed starts raising interest rates, well, that does two things. Rich people with a tons of cash and savings accounts and money market accounts, they're just going to earn more interest. So what does that mean? Now they have more disposable income. So your upper class who owns 99% of the stocks, right? Well, okay, what are they going to do? They have more disposable income now to go buy more equity. So it feeds on itself. And then you get this. And then you get the dumb money chasing, and then it gets fun. And then you get the big volatility. And mean, this is what your chart looks like, really. You have in the big macro time frame,
Mm-hmm.
you have lower lows and higher highs, called the bullwhip. And the bullwhip usually does something like this. It hits a point and it usually does this. And it'll overcorrect to the upside, and then someday it will overcorrect to the downside. I don't know if this is in 2050 when the stock market doesn't exist anymore or what, but that's how a bullwhip works. It should, like, so look at what it's telling you about financial volatility.
Mm-hmm.
It's telling you that your risk range is now expanding.
Right.
Well, if your range expands, it means you better be taking risk down at the low end of the range, and you better be not taking big risk at the upper end of the range. What? If you get outside of it and it bounces, a lot of people are going to short this. And all you have to do too, I hated that people were posting this chart on Twitter because there's just too many people that just didn't know what they were talking about. This is the money supply of the planet, by the way.
Wow.
Well, and I have a lag on this thing of like 72 days or so. So
Mm-hmm.
so this thing is shifted like a little more than 2 months forwards. Well, I mean, look at where the money supply is compared to the previous all-time high. So
Jeez.
if you have 10% more money than you used to have globally, and if stocks follow that trend, I mean, what do you think they're gonna do? Like,
Right.
there's basically two things that are gonna happen here. They're just gonna reject here and then be done, or you're gonna have like some crazy. Okay, this doesn't go back that far. I mean, people always wonder. They're like, what caused 1999? Really? This doesn't go back that far. I mean, when you look at 19. I mean, this is like comical. So like these were pretty normal because the U.S. had won World War II,
Mm-hmm.
and we were printing a lot of money actually to pay the debt off. So this was really normal. This was post Bretton Woods. It was the essentially what we were doing is we were trying to capitalize the world with dollars, which it already was, but you had to print a lot of money to do that. That's why you see the stock market go up. And then when the inflation started, they, started messing with interest rates. And it was really once they depegged from the dollar, from gold, that's when the market like got out of its range. And then they brought in the 401k program, and then we started deficit spending. And you can see what happened when we started just printing money out of thin air. And then we gave it an outlet, right? I believe Reagan famously said we're going to unleash the bull, I believe, like right here, I
Mm.
think, or right here, somewhere in there. And he was not kidding. He's like, we're
Jeez.
going to print so much money and we're going to take all that inflation and we're going to slam it into the financial system so it doesn't hit the average consumer. And then due to the 401k program, they're like, all the inflation that we print will benefit the average person. I mean, it did until until you had to pay for it today. And that's not his fault. It's the fault of Americans for just thinking we can just. I mean, look at like the number, by the way. This is only at 1,000 on the SPX. I mean that was the 2000 crash. I mean, people thought it was over. Like, oh my
Right.
God, like the world's over. Well, turns out interest rates were about to go a whole lot lower. And so people just look at this and they go, well, how high can it go? And I'm like, it doesn't matter because it's like, well, it can't take out the high. It's like, but the dollars aren't worth what they used to be worth,
Right.
right? When this, it's like there's literally 10%, and you can prove there's 10% more dollars. Go to DXY, go to the very beginning of the year. We'll just say it's right here. Dollars down 12%. And it's not
Mm.
down 12% because some guy said, man, the dollar's too high.
Right.
It's because there's 10% more money globally. I
That
mean,
makes
this is,
sense.
I mean, the red line here, this is Asia. This is the money printing. I mean, look at what the US is about to do. We bottomed out from this QT, this like QT cycle of the Fed. So it's like you just keep printing more money, and people are like, well, why does it keep going up? You keep printing money. What are you going to do with it? You going to take the money and go to the grocery store? Like, no. You're going to take the free money they hand you, you're going to gamble it, right? You're going to see if you can make more. Free.
Yeah. No kidding. 2020 all over again.
Yeah, and they've done it stealthily this time. I actually jokingly called it the Mar-a-Lago Accords because in 1985, this is actually really important, by the way. So in 1985, they actually did a strategic devaluing because the dollar just got way too high, 20% interest rates, right? They did a thing called the Plaza Accords where they short version is they essentially decided to devalue the dollar down to kind of a, they tried to get it back down to like this pivot level, right? This
Hmm.
93, and they did. And we just saw what the stock market did. Obviously, the dollar then went from 164. So obviously, we're going to go, we're probably coming back to 94. But you can see it's that same kind of cycle, right? You have those higher highs, and then the dollar comes way down, and people go, "Oh my God, like, what am I going to do?" And it's like, you have two options. You can be in the stock market, and it could totally crash on you, and you lose 50% of your money. Probably not a great scenario.
Right.
Or you could be in dollars, right? Because you're scared of being in there, and you could just lose 12%. Actually, you could lose more than that. You could lose just this year alone. You could lose 15. And the other level it could go down to is like 87. You lose 20% of your purchasing power. And this takes a while. This will show up later. Because you got to remember, the inflation always shows up after the markets top. Well, it shows up as the markets top out. Because what happens is everybody gets super rich and then they start selling, and they're up millions of dollars or $1 million. And what do? I'm gonna go buy a house now. I'm gonna go buy that car I wanted. You have all this disposable income you didn't have before. And then what happens? The people who didn't participate, they go, I can't afford a house now. I can't afford my utility bill, right?
Right.
Those are your options. Your options right now are participate and you have a 50% downside, or don't participate and just watch your purchasing power just die.
Jeez. That is very, very well put. Thanks for breaking that down. As far as, I know we were talking offline about the Fed rate decision, the FOMC. What did you make of that? I've heard some whispers that, initially we were looking at, two rate cuts, and then it was one rate cut potentially. September was the high probability, and now I'm hearing whispers of maybe a July cut, especially if we get a soft, PCE report on Friday morning. But what did you make of, the FOMC, if anything?
A lot of nothing there, to be honest. And the only reason why is because Powell's term is almost over.
Yeah.
And I think a lot of people are thinking to themselves, and not that they don't care, but they're kind of like, Trump's about to pick a new Fed chair who's probably going to do like the opposite stuff, that Powell's done. Like, I don't think he's going to get a yes man in the Fed, because that would probably be like really bad for markets, but he's going to pick someone who wants, we'll just say, cheaper interest rates. So like really all the Fed does is they just kind of chase the 2 year around. I have the
Yeah.
I have the I have the 2 year in pink. I mean, they literally just chase it around. So that's why over here in 2022, when everybody's like, "Oh my God, Jerome Powell, you're hiking interest rates too fast." He's like, "Dude, you see how behind the curve we are?" It's like we're at zero, and the market when he started to hike was at like two.
Right.
So he just like, people were like, "You're crazy," and he's like, "I'm crazy." He goes, "I'm just following the market." I mean, he literally just followed the market the whole way.
Sure.
And then when he saw the 2 year make a lower high, he goes, "All right, stop," right? And then he saw the 2 year make a lower low, and he went, "Oh, time to cut." He's an investment banker. He worked on Wall Street. He dealt with, maybe he wasn't a charts guy, but he dealt with valuations and money and prices. That's what you do.
Sure.
But he just looked at it and he goes, "Well, my predecessors were morons. Here's the 2008 crisis, right? They just held rates up here and then they just plummeted them at light speed because you know, they just followed the market down." So this cycle kind of just goes the same way every time. It's just everybody, what's the Fed gonna do? What's the Fed gonna do? It's like, I don't know, just look at what the 2 year yield's doing. That's pretty much about it. And I mean, I can actually make this a little bit easier as well. So like, if you want to know, we'll go right here. Here's the 2 year yield. I don't know. I wouldn't be buying that.
Yeah.
You know what I mean? If you were just looking at a chart and you didn't know what it was, and they said, "Do you want to buy this?" You'd be like, "No."
No, not really.
Yeah, it's like, where's it going? Well, it's probably going down here.
Yeah.
So what's going to end up happening is that, um, it's I actually had this stuff all drawn out. I had people telling me like, "Oh, we're gonna have golden," and this was like right at the election, right? I was like, "You're talking about rate cuts," and I'm like, "Well, there's two kinds of rate cuts you can do, and here's one of them. Here's the one when you're cutting rates because the economy's crashing.
Yeah.
You don't want to do those. Like these are bad." But you can see there are periods here. So post financial crisis, right after it was over, if you do kind of like these little staggered little cuts, and the
Hmm.
Fed kind of follows them around, it that can be okay. It's when you go from, oh my God, we're here and we need to be down here, that's when you get in trouble, right? And Powell tried to normalize over here too. Everybody forgets post pre-COVID. I mean, what Powell did here and here was an over exaggeration of what he was trying to do before,
Right.
right? And there was a thing called Volmageddon, like right here, because the hedge funds thought it would be super genius to short the call options on the VIX
Right.
because they took this attitude that nothing will ever happen ever. Well, that's a great bet to take right after something bad happens. It's like a really bad bet to take if nothing bad's happened in a long time. Just the law of averages.
Sure.
So when we talk about like FOMC and like, oh, does it matter? Not really, because like the only surprising thing that Powell could actually do at the July meeting or the September meeting, the only thing he could do that would actually genuinely surprise people is if he went, just kidding, I hiked. Because if he doesn't cut,
Can you
I mean, there would be
imagine?
people that there would be people now. Now the September cut, I think, is 90% priced in, so that would technically be a surprise. But let's say July comes and he just goes, "I didn't do anything." People would just kind of go, right? I wanted you to cut and you didn't. But if he does cut, you'd have some people go, "Oh, he cut, oh, okay." But nobody would be like surprised. Like it wouldn't be like, "Wow, I didn't see that coming." Like, why? Because that's all anybody ever talks about is rate cuts. So
So
it's so the issue comes from the surprise.
yeah, I'm looking at CME Group right now actually, and the percentage for a July hike has gone up significantly. It's now at 79.3% that we fall between 4.25 and 4
And
4.5.
anything over 75% is considered like a lock.
Yeah.
Like it's like a 100% chance they're gonna do it.
If
Yeah.
that's the case, then we're locked in for a July and September cut
And,
consecutively.
and and that's why you see the market rocketing, right? Because
They're
the thing
anticipating
is
it.
the thing is with rate cuts, like if I were just to like lay like like if I were just to lay like the SPX over the top of this,
Hmm.
I mean the 2008 financial crisis didn't happen until like over here. So that's part of the reason why the problem got so bad is because the Fed was cutting the front end and people were like that couldn't really afford loans before. Oh my God, I can afford a loan now. I'm gonna go buy a house. Like, uh-oh. Like the Fed doesn't cut out of the kindness of their heart. They cut because there's some problem in the economy, right? There's
Right.
some inefficiency of demand. Well, and this is what I always tell people. There's two kinds of reasons that demand can suck. Is demand bad because there's some kind of a bottleneck that's preventing people from buying things, or is demand bad because people don't have any money? If they don't have any money, then you have to figure out why they don't have any money, right? Like you could argue a really big reason for the inflation that we had in the post-COVID era is two things. We shut down the whole planet's production, right, of quote unquote non-essential goods. So we just
Right.
didn't create enough supply, and then we printed money, which is called demand. So we increased demand without increasing supply, and we created shortages. And we're still paying for that today. We'll be paying for that for the next, probably 2 years. So that's a case where people go, oh, we should cut rates. Like, well, no. If anything, you should raise interest rates because you need to find a way to stifle demand. The problem is that when you change the direction of interest rates, you actually get initially the inverse effect that you want. So if your goal with raising interest rates is to stifle demand, the very first thing that happens when you increase rates is you make it so people who have money now get more free money in the form of interest. So if you're like, oh my God, we have a housing shortage. Well, if you hand rich people more interest on their loan, on their savings, They have more money to go buy houses. They have more money to go buy cars. It takes a while until they buy out, and it's the same thing. Well, once they buy the houses they're going to buy, well, then those prices stop going up because the average person now that, they don't have the disposable income and now they don't qualify for the loan.
Right.
And again, I mean, Powell's not dumb. He knows this stuff. He's seen, I mean, Powell has been through so much stuff. I mean, he literally got the job like over here. He's like, all right, we got to normalize rates. And it goes up. And Trump starts a trade war. Like, Trump was so mad. He's like, I'm starting a trade war. You're not raising rates. And Powell goes, okay, I'm gonna drop interest rates, right? And he did it right into the COVID pandemic. And then he goes, oh my God, I dropped rates too far. And then he had to complete. So if you just draw out like the linear regression here, you know, if you were to just draw this out, you just stuck this on top. I mean, he went most of the, you know what I mean, to zero it out. He went most of the way
Yeah.
because he figured, he goes, well, I had rates too long in this direction. So I need to have rates, quote unquote, wrong too far this direction to balance. Because
To balance out.
realistically, what's going to happen here is we're just going to create a like a bound on we're going to have a bound on interest rates most likely between like we'll just say between like 3% and 5. And this is the kind of stability that we need to get back to in the financial system. So we need to have it so when interest rates are high, the economy's overheated, and then you need to have when interest rates are low we're talking about for an extended period of time. That tells you, okay, the economy sucks, because people tend to think about interest rates in terms of like a borrowing cost that has nothing to do with interest rates, like at all. Like there's never been like a consumer credit report that's come out or like anything to do with like borrowing money that has actually moved the treasury market. It 100% moves on GDP and inflation, like a combination of the two of them. That's 100% what moves these things.
Yeah.
So it's like if if yields are going to come down, it just means one of two things. You're either going to have your growth is going to tank, or inflation is going to tank, or a combination of both of them.
Right.
Obviously, we know which one's the good one. You want inflation to come down and growth to go up.
Sure.
The Russell thinks that that's what's going to happen. Like the Russell hates inflation, but it loves low interest rates because those companies are all loaded up on debt, right? So low inflation for them, great, because the amount of money they have to borrow doesn't keep increasing every year. And you have economic growth, which means people can buy their stuff. That's kind of the issue right now. Is it's like it's a good time to start. It's also a really bad time to start learning because you have to know this stuff if you're going to be like an investor.
Right.
Otherwise, you kind of just have to like roll the dice.
Yeah, you gotta have somewhat of an understanding of uh just the macro environment we're in, or at the very least understand how certain things are correlated, right? Obviously, you have a full grasp on this, or a well-rounded grasp on it, I should say. But like, just all too often, I see a lot of people just kind of hop in to the market, get their face ripped off because they, you know, beyond candle patterns, right? Or just understanding basic movements of, stocks. They don't understand how inflation affects things. They don't understand that PCE is coming out tomorrow morning and that might be a volatile report. Those are things that it all ties together. And that's part of the reason why I love the market, is just because it's this giant picture that we're all trying to, decipher in a sense, right? But um so as far as let's see, as far as things stand for you right now, obviously you're using, trading view a lot. Are there any other, tools that you're consistently using on a day in day out basis for trading, or um, you know, finding setups, things like that? What are your more common tools, I guess, you're using?
Um, I hate to say it because it'll change in a couple of years, but Twitter,
Did you
like, I
say
mean,
Twitter?
there is no X, there is no better way to see what kind of mistakes people are about to make. Because again, that's where the money isn't made in the success. The money's made where everybody else makes a mistake and you don't. That's where you make the money, right?
Yeah.
It's where you short the top because they all went long, or you bought the bottom because they all sold it.
Yeah.
All you have to do is go on Twitter and just look at no, there's a lot of bots. You got to be able to determine who are the bots and who are real people. Look for the people who have literally no idea what they're doing, but they think that they do. And all you have to do
There's plenty of those.
is just don't bet against them. Never let a stupid person take your money. Don't see they went long something and think I'm shorting that. Because if you're wrong, a dumb person just took your money and now who's the idiot, right? It's you. So what you do is you find these people that make these catastrophically bad decisions and you just follow them along the ride and you just wait for them to be too greedy. Like like poor Palantir, man, I had this thing at like $30.
Jeez.
I got it at like 30 because it was S&P inclusion. Like the options chain basically said that was going to happen. Like you just had to look at like the option, like the open interest on the options, and it was like, wow, everybody thinks this thing's getting in, and it did. And I remember Palantir goes to like, oh, I got my log charts on, I think. Oh no, I'm sorry. It takes out the all-time high like right here and rejects. This was the most classic Twitter mistake I've ever seen in my life. This is like the poster child for this one. The Palantir goes to the all-time high and rejects. And I saw people on Twitter saying, that's it, get puts, it's over. And I was like, you do realize every trade between here and here, like you realize there's people short this, right? And these guys on Twitter were like, nah, there's no chance. And I go, what do you think this was? Was this the dumbest people in the world? I don't think so. I think this was like the smartest people in the world, which means they probably also have the most money, right? Because if you're smart, you make money. Okay, well, if they all bought it here, and now all of the big funds in the world, right? S&P, SPY. If you have a mutual fund, anything that tracks the S&P is now forced to buy Palantir. Who was forced to buy Palantir over here? Nobody. Nobody was forced to buy it. Well, they just got forced to buy it right here, and they had like a whole week to do it. You're not going to be able to buy all your shares in a week, right? So it's like, so what do you think is going to happen? Well, it's going to go to new highs because if nobody was buying it here before, what do you think it's going to do? Like, it's just basic kind of just thinking. It's just like game theory. If nobody was forced to buy it, but now they're forced to buy it, it can only go higher. These people are like, oh, that's over, it's puts. And it's like, well, really, that was wrong, you know? Same thing with Hims. Like, Hims is a great example. Nobody wanted to buy this thing at 20. Oh, there's my level. Same thing again, right?
Yeah.
Why did Hims break through here? I was like, well, they didn't have Ozempic over here,
Right.
but they had Ozempic here. They also didn't have Ozempic. I think maybe they had just gotten it. But again, it's the same thing. And all these people were like, oh my God, this company is so screwed. And it's like, it's a bubble. It's like, but Ozempic is going to like change. It literally just cured obesity, which is like the number one killer of people in the United States. Yeah, or it's like a side effect of being obese is the number one killer. Like,
Right.
so you're telling me that people that are dying of obesity aren't going to buy this? Like, are you guys like literally on drugs? Like, every celebrity you'd ever seen, like it was crazy. In 2023, you
Everybody.
could have seen a celebrity, right? And they were like a little overweight. And then in 2024, you'd see them and you're like, did that person just like lose like 50 pounds? You're like, why do they look so different? And you're like, oh, because that drug works.
Right.
Okay, well, if these people are all buying it, what do you think the pharmaceutical industry is like begging to do? Sell it to everybody else. Well, if they have Ozempic, if they sell it, and this is what I mean. This is a classic case of the money's made where everybody's wrong, and you just were like delusionally right. It, I have a whole watch list just like full of this stuff. Like IBM, boomer company. People are like, oh, it's a boomer company. I'm like, they do quantum computing. That's like the opposite of like boring and old. That's like the newest thing in the world.
Right.
Yeah, it's boring. I don't care. I'm like, okay, well, I'm like the smartest people in the world disagree, so you guys are gonna buy IBM like up here. I have an entire watch list just dedicated to this. It's just of stuff like, I mean, I literally have a space watch list. I have this one on TradingView too, Rocket Labs. I literally bought it like over here in like August.
Now, are
And these,
you? Are you buying shares or options
I had
now?
shares of this. Yeah, I had equity for this.
Yeah.
And people were like, well, why would you buy this? And I'm like, because I had a hunch. I'm like, well, there's a chance Trump could win. And this was about the time when Elon got involved with his administration.
Yeah.
And I went, well, if Trump gets in, you know what Elon wants to do?
Oh
Give me
yeah.
more SpaceX money, right?
Wants to go to the moon.
Yeah. Well, what are you going to need to do that? Rockets. And Rocket Lab makes all the pieces for all this stuff. And what's everybody else going to want to do? So I was like, okay, are we going to launch more rockets or less? And then Trump wins, right? I mean, look at there's the election. And what did Rocket Labs do? It
Parabolic.
flew. I mean, it was already going up, but it flew. Then had a big
Jeez.
false breakdown. So the problem is people go, is Rocket Labs a buy? And I'm like, I can't tell you because I'm in over here.
Yeah.
Like,
Right.
I don't know. Is it? I don't know. Those are some big volume candles. Kind of looks like a blow off top. I mean, this is like the trick. Like Lunar was good too. I mean, Lunar
Mhm.
over here. I gotta go to the daily for this one. I mean,
Yeah, I
this is
played
just kind of
around
like
with
the
that.
yeah. This was so over here. I literally have these things on trading. It's crazy. So it would have been. No, actually, it might have been over here. Yeah, it was over here. Because it was in August last year. I found this stuff like around here. Dude, the market cap of the company was like 100 or 200 million dollars, and they were getting $300 million NASA contracts. I'm like, dude, they're getting contracts that are worth more than the company. I'm like, that doesn't even make any sense.
Right.
They just bought it based off of the fact they go, how can you be valued less than the contracts you're being given? Like, imagine if I just handed you $1 million loan and you made like, let's just say you were making like for a job, like just the median income in the U.S. How do you then not have a net worth closer to a million? I'm like, that doesn't make any sense.
Right.
And again, these things they're very volatile, of course, but and that's kind of the key when I say you just have to be right where people are wrong. And it happens so often. Like Circle, I couldn't force people to buy this thing. Really, the Robinhood IPO came out, and like I just told people, like set your limit order at like 35 on Robinhood. They'll fill you some shares. Nobody would do it. Like it's just stable coin. I don't care. And I'm like, and I even posted it on in the Discord server that I'm in. I mentioned it to people like over here. I was like, if it comes back to 103, grab it. No, I don't want to grab it. Well, the problem is the Senate was working on this thing called the Genius Act, which had to do with stable coins, and that's what Circle does, right? So this stuff didn't require charts. This stuff just required like what is happening and
Right.
what benefits from that,
No,
right?
that's a good point because we actually covered on the show that legislation that they passed, and those I covered this and also Coinbase, which has also benefited from it. Um, and yeah, just the move that this thing has done has just been absurd.
Yeah, so the issue is now with the risk in the market is a lot of these things that have made these big moves, right? They've already made them. So the risk now is where do you get them? That's the problem. Like Oklo is a pretty popular ticker that I hear a lot about. Problem is this company makes no money. Like they do nuclear fusion, they don't make any money. They have like zero revenue. So it's like, okay, so if you bet that this is the future, I mean, it's like, I mean, this number should be zero.
Right.
But if you're bullish on nuclear fusion, which is like probably the best form of energy like ever made, like, well, there's your support. So it's like, what do
Right.
you eat? Like, this is the risk you now have in the market is you're going to lose 20% of your purchasing power.
Yeah.
That means Oklo might as well just be here. Like, okay, what happens if you buy it and it goes down to like what happens if you buy Oklo and it goes down here and those dollars you lost value and now you're down here? And people wonder why is the market so kind of crazy? Because you're getting rewarded for doing everything wrong. So you have to be able to realize like, am I being rewarded for being smart or for being stupid? And
Right.
if the market's rewarding stupidity, don't be smart.
No, that's a good point. That's well said. Um, what are your thoughts? Obviously, we can't predict the future, but um, do you think we hit a new all-time high tomorrow? Do you think PCE comes in a little soft? What are you expecting for Friday?
Let me look at the data today because I somehow didn't even look at that.
I heard
Wasn't that
GDP was kind of soft, but we had some durable goods numbers that came out really, really strong.
let me look. I tend to only look at inflation reports and growth. Those are the only two things to me that I really. The other stuff matters, but to me, it doesn't really like. I think it's usually just a factor. Okay, so like durable goods orders were like really high. Okay, so what do we get? Minus zero point 0.5. We had PC prices, which I still don't, after 10 years, understand why we have PC prices and PCE. Kind of think those are the same thing.
Yeah, and
Little
that's
hot.
like the Fed's preferred inflation gauge, right?
Yep. They like it because it understates it. That's
Yeah.
why. Actually, I think this time around it might overstate it, which is kind of funny. It'd be funny if they just go back to saying, "Wow, we like regular CPI now because
Yeah,
it's a
yeah, we
lower
changed our
number."
mind.
Um, I don't know. I mean, I'm not
Just
what the
from
market does on a day-to-day basis. I have no idea. I mean,
yeah,
I'm as much of a coin flip as anybody else is, but like
yeah.
what I will say is the futures do have some room. There's a little bit of a magnet here, to the all-time high. But if you go to the actual like QQQ, um, I wouldn't be surprised if there was like an actual man. This is some old TA that I have on this. Wow. Oh my. I'm gonna keep that. That was pretty good. Um, I
I have
think it's. Let me go to the line chart.
I
By the way,
have some
learn to
SPX
use
calls.
yeah, learn to use line charts. Can't trade using a line chart. You need to get better.
Good old line
All right.
charts.
Yeah.
That's
So
one
I
thing
would
Robinhood
say,
gets right.
yeah, yeah. You shouldn't trade with a line chart, but you
Right.
should be able to trade with one.
Sure.
My gut actually tells me we should retest this.
Yeah.
That's what my gut tells me. Because usually, if you break resistance, right, you tend to, you know what I mean?
Yeah.
Something like that. That's what my gut tells me.
I would
Um,
imagine there's a lot of sell orders sitting right at this range being an all-time high.
yeah, it also depends on, too, if you think it's a double top or not.
Right. I could see, if we get a soft PCE print, I could see an initial, keep in mind, I focus on more so intraday action. I could see like a pop in the morning to a break of all-time high and then it fades, something like that maybe.
Yeah, so when I go to like the really big time frames,
Hmm.
it's not a double top. Like if you go to if you were just a monthly trader, you'd just be like, oh, that was cool. Like you wouldn't look at this and be like, uh-oh. Like you wouldn't be like double top because that's not a steep enough, you know what I mean? That's not a steep enough draw. And plus it already cleared that level by like a lot, like on the
Yeah.
monthly.
Yeah.
Go to the weekly. Um, hmm. Yeah, kind of just looks like a bunch of short sellers getting smoked because again, you have a higher low, right?
Right. Right.
So it's still higher lows and higher highs, so it's like,
You just got shorts getting their face ripped off daily.
yeah, and my rule, the reason why I drew this in is usually my rule is usually if you're gonna get a double top, it's kind of so it depends on the volatility of the asset. You gotta kind of take that into account. It's usually like 3, 4, 5%. Usually more of a like that's just enough to bait everybody in to get rugged.
Yeah.
But again, we keep printing money, so I just like as much as I want to be like, oh, we're gonna get smoked. It's like, I mean, there is no worse position to be in than being the guy who the sky is falling all the time,
Yeah.
and you're just wrong every single day. And then that one day you were right. I mean, I guarantee you there were probably people, over here that were just partying, like, oh my God, I was right, the market crashed. And it's like, well, now what? Got your generational crash and it happened in like 5 days.
Yeah.
Like, now what? Like, you're just gonna, and then these people are still bearish all the way over here. It's like, dude, we print money. That means we reprice things higher. So it's
Yeah.
like you almost just have to just stay bullish despite everything telling you like not to. You just have to be willing to get smoked.
Yeah.
I mean, no hedge funds or banks blew up on this somehow. I don't know how.
Yeah. I don't either.
I literally to this day do not know how. Like, I don't care if the president told them ahead of time, like, hey, I'm going to do this or what. How did they not get smoked?
Yeah,
Uh,
that doesn't make any sense.
Like, so the fact that nobody went bankrupt, like we didn't have banks blow up, nothing happened.
It's kind of weird, right?
I mean, it kind of tells me that like, I, I mean, like, and I have people telling me like, oh well, banks blew up, they just didn't report it, and I'm like, well, here's the XLF, here's all the banks that blew up that didn't.
Yeah, no kidding.
Like they look great.
Well, that's
Goldman
the
Sachs is looking the greatest. Like,
yeah, and that's the thing too, is like I guess my counter argument to the perma bear out there that says, we're way too high, we're gonna come back off. Just look at XLK, look at XLF, right? Like you were just saying. I mean, they're holding up. Tech, financials. I mean, there's no usually you would I feel like usually you would see some weakness in financials if this rally was fake in some sense, and it just doesn't seem that way at all. So
what it looks like to me, if I have to guess, is it looks like to me the market's front running these lower interest rates they think they're going to get with the next Fed chair.
that's what it seems like.
And the irony of this will be is I almost guarantee you when the market gets what it like, because it kind of always seems to go the same way. It's, oh my God, we need lower rates, we need lower rates, and then people they start getting lower rates. And then once they find out why they need the like, it's like they don't put two and two together. Like, why do you need lower rates? Like, well, because the
Yeah,
economy is like really weak. And then it's once they realize, why they deep down wanted those interest rate cuts. 2008's the best. No, no, 2008 probably will never happen again because of like how stupid people were. But I mean, they were cutting rates, cutting rates, cutting rates. Oh my God, this is awesome. This is awesome. Then it was about right here. Everybody was like, I think there's a recession. And then you can see right here at the end of August, the data got real bad, and everybody went, "Oh my God, Fed, you have to really cut rates." And then suddenly it turned into like, "Oh, now we see why we were thinking about cutting rates because
right.
the economy like sucked." And the irony this time around, well, if AI takes everybody's jobs, you can't cut rates and bring the jobs back. They'll just cut interest rates, and the financial markets will just go to Pluto, and then and then they're gonna not have any jobs. I mean, there'll be new jobs, right? Because the economy will change. But it's like, I think all that's gonna happen this time around is they're just gonna cut rates and no jobs are gonna come back, and you're just gonna have the financial markets just go to levels that are borderline like stuff you'll like. Take whatever the number you think is that you would laugh if you woke up and saw like the S&P 500 at tomorrow, and then just double that, and that's probably what the bubble top's at. If I told you the S&P tomorrow was at like 7,000, like if that makes you fall out of your chair, then it tops out at 14.
Yeah. Yeah, the money keeps printing, that's for sure. That's for sure. It just keeps going up and up and up. I'll be curious to see what we end up getting with PCE tomorrow. I mean, I'd put a small bet on a new all-time high tomorrow, but we'll see. I could be wrong, but it definitely seems like we're trending in that direction, and you're going to get this new Fed chair nomination here soon from President Trump, I'm sure. So we'll see what comes of that. But um, Tom, this has been fantastic. I'm so glad that we were able to get you on the show here. This has been a wealth of information. Definitely would love to have you back on again soon if you want. Just for anyone listening, if they want to get in touch with you or any of the content that you're putting out. I know you do some stuff with Tailored Trades, but very simply, where can people go to you know reach out or learn more about you?
I made a Twitter account that it's borderline financial stuff and it's borderline just kind of trolling people and having fun, but it's Crash Out Capital. It's just at Capital Crash Out. Again, I mean, I'm on there. It's more just kind of for having fun. It's like
Sure,
doing both.
sure, and
That's basically it. I keep low profile.
okay. And any Discord communities that people can look at, or
Yep, really just tailored trades. That's it. I'm not
great.
really in any more servers anymore these days.
Yeah, in Taylor Trades has been great. For those of you who haven't seen already, we did an interview with JP a couple months back, and then one with Kevin, aka the Market Bishop, a couple weekends ago. So definitely make sure to go check those out if you haven't seen those already. But Tom, again, thanks so much for taking the time to come on today. Folks, make sure to check this out, share with a buddy. Make sure to like, subscribe, and follow wherever you listen to podcasts. And remember, folks, as always, plan the trade and trade the plan. Have a good one.